Now open the floor to any questions. We will first have questions from the physical attendees present here and move on to the virtual ones. Requesting you to please share your name and organization name prior to asking your questions.
Good afternoon, team Augmont. Sir, you are one of the pioneers in the digital gold space. But of late, as we all have been seeing, PhonePe, Google Pay, Paytm, and even Jar is eating into market that may be yours also. So, since you are technology-based platform, what kind of investments have gone in last couple of years to give you an edge over the competition? And going forward, how will be the technology investment scenario from your company? Secondly, sir, your product suffers from some kind of structural concerns. Digital gold lacks a formal, centralized, SEBI-regulated exchange framework compared to mutual fund and EGRs. So, how do you try to encounter such things, limitations? Thank you.
So, as far as the investment in technology is concerned for digital gold, we've already created the product and there will be further enhancements to the existing product and the technology. We don't have to really invest more in terms of building some new capabilities around technology. We will keep on enhancing the current digital gold ecosystem that we have. Also, when you mentioned about competition, yes, there is competition in the market for digital gold, but the digital gold is still at a very nascent stage. Overall, all the players combined together have actually literally just scratched the surface of the demand that is already there for digital gold. So digital gold caters to an audience who wants to buy fractional quantities, but at the same time want physical delivery of the gold and silver that they are buying, and that also in smaller denominations, which currently is kind of missing in any other product form. So lower denomination redemption and fractional buying currently is not available in any other product. So there is a market for digital gold. The digital gold market is growing. In fact, if you look at the Technopack report, they estimate that by 2030 this market will grow to more than 50 tons. So that's a good market to be in. Coming back to the structural problem that you were saying about the regulation, see, in a way, regulation, yes, I agree that it is missing in the digital gold product, but all the large players in the digital gold market have come together, they have created an SRO, and we are kind of having put some self-regulation measures in place to protect the consumer's interest. So there will be a trustee who is actually monitoring the movement of gold. There are independent audits that are being conducted for the physical gold that is there in the world. So those things are in place. We would welcome if there is some more developments in this regulation environment, but we need to see how it goes.
Good afternoon. Good afternoon.
Hi, good afternoon.
Yeah. Myself, Babita from Times Global News. My question is, with traditional jewelers and newer fintech platforms entering digital gold and electronic gold receipts, what is Augmont's core competitive moat?
So, good afternoon, Babita. Jewelry business is very different from the business that we do. If you see, the jewelers have, for example, they have to carry gold because they have to run stores, they have to do investments in stores. This becomes just an additional product that they provide. Even today, we have so many jewelers who are our partners. They prefer, a lot of jewelers prefer having partnerships with players like us, because the moat is that this is particular segment of gold where there are certain capabilities that we have developed, whether it's technology or whether it's refining capacity or whether it's accreditation. So both the business models are so unique, whether you compare it with the jeweler, when the jeweler decides whether to outsource or do in-house. We as a technology platform obviously are catering to not just jewelers but tech partners also, and that's how we have a larger access in terms of distribution.
Thank you. My next question is, how does Augmont differentiate itself from competitors in digital gold?
So, if you go to see as a customer, the approach towards life cycle is something that is unique to our platform. When we saw the comparison chart, the these same customers are able to come back to our gold for all stores to sell their own gold. They're able to come back with their own gold to avail gold against gold they go to these centers. So we are an ecosystem, a completely integrated ecosystem. The idea behind Gold for All and idea behind Augmont's vision is that we should be able to help customers manage their gold through the entire life cycle. They should not have to go through different modes, and they should be able to manage it directly through the application and through these touch points. Because people can manage money through these technology platforms that are there, but for managing gold, they don't have anything. And that's the reason why the whole idea behind Gold for All as a digital platform.
Thank you.
Thank you.
Just a couple of questions on the platform itself. Do you offer forward contracts to begin with? And when it comes to price discovery, what is the leverage that a client of yours or user gets over other?
Sure. So, what happens is when it comes to forward booking, no, the platform is for the spot platform. So the customers make the payment and take the delivery. As far as the price discovery is concerned, it just cannot be explained over a simple graphic or a simple conversation. But what I can explain to you is it's extremely dynamic. It is a use case where because of the scale that we have achieved, we are able to obviously have benefits in terms of the procurement which we are able to pass on to jewelers. Because we have a backend refinery ourselves, because we have the centers that can collect old gold, it all adds up, and that is the approach that we are taking, and that becomes our strength.
Okay. Also, your EBITDA margins are below 1% right now. What is the roadmap for margins? And in the same breath, if I can ask, what are the other value-added services that you're looking to kind of
Sure.
add?
So, as I was explaining, the technology that exchanges use is for matching, but the technology that the spot platform uses is where the counterparty is always Augmont. And this is precisely the nature of this business, where the counterparty always enters the supplier. You see, the global scenario also. So in that case, obviously the revenues get booked in the books. But to see another metric which I explained to you on the chart is also to see the net revenue. When you see the net revenue and when you see the EBITDA as a percentage of net revenue or profit as a percentage of net revenue, the dynamics of the data completely gives you a better perspective. Because obviously the margins are because it's a spread business between the buying and selling. But we have to also keep into mind that the average working capital cycle as per RHP is only 1.76 days in FY26. So that means that we've done around 100 plus cycles. It's a fast settlement and cycling which helps us with a higher ROE, and that's the reason why our ROE for FY26 was 51%. The weighted average ROE for the last 3 years was 55%. So if you keep in mind all these factors, this is how we actually try to use capital. As part of our strategy, as I said, we want to add more products to the same jewelers, where the cross-selling of lab-grown diamonds or other products will help us enhance the margins on those products. Even in the Gold for All, we are obviously increasing the number of partnerships that we want to do. So consumer businesses obviously have a higher margin, and overall, this is what the strategy is as per RH.
So just to add to what Ketan said, FY24, the revenue contribution from the Gold for All business was around 3%, which increased to 7% in 26. So as the consumer business grows, that will also help us getting more margins.
Hi, I'm Shilpa from Business Standard, and I just wanted to ask, despite your profit having tripled between 2024 and 25, and there's still like a 53% increase from 2025 to 26. Your cash flow has been on a bit of a declining trend, as in it was largely flat last year, and the most recent fiscal it actually declined. So apart from loan repayments and changes in like current assets and liabilities, do you have any other rationale, like do you attribute this to anything else? And secondly, how much of this, how much of the proceeds will go to release the bullions? Because there's a large volume of transactional exchange between Augmont and release.
So as far as your comment on the cash flows from operations going down, see, our capital is getting locked in working capital. If you see at the cash flows also, the major contributing factor towards the decline in cash flow from operations is because of increase of working capital requirements. And that is the precise reason why we are going to market, so that we can get funds for utilizing it towards working capital requirements. Now, as far as electricity is concerned, no, the capital is going to be utilized only for the working capital requirements of Augmont. There are transactions that have happened with them, but they have happened at arm's length, which has been verified by the audit committee, as well as been approved by the board. That's working capital.
So my question is regarding your refinery. So you have mentioned that you have two refineries, one at Rudrapur and one in Mumbai.
Yes.
So from where you got the raw gold for refining? Used gold or gold ornaments or see gold or something like that?
It's both. It's a combination of both. We can import Dore bars from countries as in from India also and outside of India, where we import Dore bars to refine them into pure bars. And we have local jewelry which we also recycle.
Another thing regarding digital gold and physical gold. See, we can purchase digital gold from anywhere in India. But how we will get the pure gold? See, shall we purchase it from the nearby jewelry, or how we will get it? And another thing, see, you have mentioned we were keeping that gold as 24 karat gold. Is it possible for the common public to buy 24 karat gold from jewelry? See, I have heard that it is not possible. We can't keep a gold bar or a biscuit at home. See, it's only in the form of ornaments or a coin that is the possibility. How how can the common man procure gold from your wallet?
So the digital gold product is 24 karat 995 gold. Any customer can just buy digital gold, which is a product which is fully 24 karat 995 purity gold, and it comes and 999 purity rather. We also, so as far as the question is concerned that they can't keep the gold coins or bars, customers do buy gold coins and bars if they can. So,
But jewelry is what gives pure bar or pure biscuits to us.
No, there's no
They told us to sell some of the restriction.
what believe there is no restriction on keeping jewelry or gold bars in a chain. What do you believe?
There is no restriction, you can buy it. There are some jewelers who actually sell it also, and it is available.
It is legally allowed, you can keep jewelry bars as per your choice.
Good afternoon. Myself, Mrinali from newsindia.com. My question is that what are the key milestones should investors look forward to over the next 3-5 years, and how does the management plan to achieve them?
Hi. So if you go to see our strategy segment in the RHP, one of the reasons why we are raising capital is because we need it for the working capital. So out of the 620 crores, 465 crores is going towards the working capital. As part of the strategy for the spot platform, we want to increase the number of delivery centers. We want to go to smaller towns. We want to onboard more jewelers, and we want to start selling more products to the same jewelers on this platform. So that is the strategy as far as the spot platform is concerned. In the Gold for All platform, again, as I said, we want to enhance the partnerships that we already have, either through the fintech partnerships or the GFS stores. And we, on the refinery front, we are looking at enhancing the accreditations of the refinery. So that's a part of the strategy. And historically, if you go to see, we have been adding products and working on those products. So that data is already available to you. And as part of the strategy, these are the 3 things that we are working on.
And what are the company's plan for increasing revenue from existing business segments?
Revenues from existing.
So basically, as Nathan mentioned, the strategy is to keep on increasing partnerships and increase the number of jewelers and spot delivery centers. That will help us increase the revenue.
So this read from business line, just wanted to understand what is your capacity utilization in the refinery, and across business you seems to be carrying too many risks. How do you de-risk yourself, your business?
So one question was about the capacity utilization. If you go to see, our primary business is the platform. Our idea is to sell to the customers. But we wanted the refinery as a backward integration simply because we wanted to complete the life cycle. Anything where we are able to procure old gold from the customers or from our centers, we want to refine ourselves. And obviously we can import Dore bars also. So refinery is just one of the backward integrations for the platform business. Now, unlike large commodities, gold is a much smaller commodity. The refining space or the refining capacity or the capex required is much smaller. Even if the capacity utilization is, say, for example, not very high, it does not really lead to any losses per se. The main reason of having an installed capacity is that you need a very high daily capacity. So, let's say, for example, if I have a large amount of gold coming in from any mine, I have to refine them in a day's time so that I do not block my capital for a longer period. And that is the precise reason why the capacity build is higher. However, lesser utilization of the capacity does not lead to any major losses or anything because it is a very small commodity and hence the setup also required is in a much smaller space. Coming back to the risk factors, obviously, as far as our RHP is concerned, we have to be very transparent, we have been very transparent, and we have listed out all the possible risk factors that this business carries, and we want to be very clear to the investors because obviously they need to understand the risk factors associated with this company.
Because right from the spot platform to say EMI, if somebody buys 2 installments and then for 4th installment or 3rd installment, they change their mind. How are you going to tackle this and how are you tackling this? And in the same in the spot also, somebody books it and doesn't take delivery, what happens?
So as far as the EMI jewelry product is concerned, if a customer is not able to pay the EMI on time, there are provisions within the product structure where we can cancel the order and money is settled with the customer. Also on the spot platform, we take margin money from the customers. So in case if the prices move against that particular order and to the extent that the margin money is getting utilized, we call the customer and ask for more margins or we cancel the trade and square off the position with them and settle it. So there are no credit risk or risk as per se with vis-a-vis the customer. Yeah.
So, but it can't be carried forward for more than 1 day, right?
2 days.
We normally want to settle within 2 days. If they request, we might entertain them, but we ask for the additional margin.
But they can't sell it.
No, they can't sell it.
Moving on to the
Sir, there may be middle-aged persons